Welcome everybody to our first episode of Elevate, which is the Black Wharton Alumni and Focus, Excellence in Focus show. It's our first episode. This is going to be a series of conversations with Black Wharton alumni, put on by the Black Wharton Alumni Association. My name is Fritz Charles. I'm the VP of Communications. This is a new initiative for us, but we've been launching a lot of different things. We've been connecting the community in person throughout the different cities that we're in globally. We're looking forward to in-person connection at the upcoming conferences. With This weekend is going to be the Wharton African Business Forum. Next month is going to be Whitney Young Conference, and so we're going to have ample opportunities to connect in person. But we've also been connecting digitally. So we have a pretty live WhatsApp group, which we invite all the alumni to be part of. We have different themes from global affairs to business to tech to real estate. A lot of lively conversations, a lot of educational conversations, and even fun conversations as well. But this is the initiative that I'm even more excited about because we're going to have deep conversations with very illustrious members of the community that we're going to record and make available to alumni worldwide. And a lot of our alumni are going to be joining us during this episode, so it's going to be a pretty dynamic and engaging show. I don't want to waste anybody's time because you didn't come here to hear me. You came here to hear from our illustrious guests. So I'll do a real quick intro before passing it on to them to do, their stories, the justice that their stories deserve. We have Brandon Hoffman, Wharton grad, class of 2015. And we have Antonio Key, Wharton grad, class of 2014. I've gotten a chance to connect with these brothers at different times. Antonio, when I was at school, came and visited, and then he ended up matriculating a few years later. We were running into each other in New York and be part of different group chats and talk business opportunities and family, all that good stuff. Brandon Hoffman as well, kind of met him through Antonio. And one thing I'm really excited about is like how they came together to launch a venture capital firm. This is what Wharton's all about. This is what Amber is all about, right? It's about going to, joining this, institution that we all work hard to come into, but, building the personal connections that, produce friendships, but also business partnership. And so these two brothers have been able to do that. And so that's why when we were launching the show, these are the first two people that came to mind, and I had to kind of get on to kind of tell their story and share insights with all of you. But that's my short spiel on you guys. I want to hear from a primary source. So let's start with Brandon. Love to hear about your story and how'd you come to be co-found Sunset Ventures with Antonio, and then I'll pass it to Antonio.
Sure. Thank you very much for the intro, the kind words. Brandon Hoffman, from Southern California, currently live here in Los Angeles, North Hollywood to be specific. My journey's been a meandering one. I'll provide context up until MLT in Wharton, around 2013, which is when I met Antonio. Then I'll let him provide his backstory. So for me, growing up, music has always been very important to me in my life. For anyone that can see, I have a lot of remnants of it all behind me. Piano, various records, folks I look up to and listen to all my life. So music was my passion. That was my first love, actually. Ever since I was a kid, and even in the hardest of times started to get tougher, I would say, around the age
what
of...
was your thing? You were playing the pianos, singing, all the above. What was your specialty?
Yeah. When I first started, I wanted to play piano, but didn't have a piano, didn't have a keyboard. So for years, that was my goal. That was my first goal. I saved up, and bought like a Casio keyboard from Good Guys, if anybody remembers, before they went out of business, along with
Right,
Circuit
right.
City of the world. And then
Yep.
taught myself to play piano. So I wanted to play like Stevie or, like a Brian McKnight, let's say, in the 90s. Later on, like a John Legend. And so these are a
Okay.
lot of the folks I looked up to, a lot of the
That's a
songs
that's
I
a
learned.
Wharton connection. We need to get him in our group. Uh, John Legend.
Yeah, man. Yeah. And so yeah, it was piano, it was songwriting. So it was a lot more behind the scenes, creating the music. And frankly, for me, it was a creative outlet, right? One of expression, especially just to help me get, frankly, through a lot of life, even at a young age. And so, yeah, fast forward a little bit, sort of teenage years at this point. Unfortunately, my mom has left, and we were estranged. I was kicked out, put on my own. I was about 15 or so, and so from
Wow.
that point on, I was on my own. So then, I actually started to take music even a lot more seriously. It
Hmm.
was kind of all I had, right? And it's what kept me going. Um, so I mean, that was where my head was. That's where my heart was. I was an AP
Hmm.
student, in a public high school. It was kind of like no big deal, to be honest. I felt I didn't even understand, what the opportunity was with regards to education. It just what wasn't clear to me, and I didn't have anybody around me that really instilled any of it. I just happened to be, fairly smart, got into some of these classes, didn't take it nearly as seriously as my peers. And senior year ended up dropping out of high school. I dropped
Wow.
out because I sort of fell through the cracks of, the system in the process.
Sure.
Reason was, I couldn't even fill out a FAFSA form. I didn't have my parents'
Right.
tax info. They were filing taxes. I just couldn't provide any info. And
Sure.
unfortunately, the counselors at my school, um, it was kind of a too bad. Go to community college. That's where most go from this school. And
Hmm.
so at that point, I was like, well, if all I'm doing is going to community college, and that's my only option, I ended up dropping out and I did independent study. So I ended up graduating early technically, but I didn't walk away
Okay.
class. So I went to community college. I was juggling a couple part-time jobs, nights and weekends. I was building a recording studio, producing, writing,
Okay.
driving out to LA, trying to make it big, work with the big record labels. Um, and so finished undergrad by the age of 20, but I didn't really have a real experience.
Yeah.
I went to Cal State Fullerton after community college. It was a commuter type of, local experience, right? So
Brandon,
no
sorry
in-
to interrupt. I'm gonna let you finish, but this autobiography that you're gonna come out with is gonna be amazing. It's gonna be
so,
amazing. But keep going.
someday. And yeah, so I got the piece of paper, right, that said I had a bachelor's degree because that's what I was told you should get. And I thought that would just open up all these doors, opportunity and financial stability, get a good job. Like none of that, right? And I never had an internship. I didn't make a single like friend. I didn't meet alumni. Like that just wasn't a thing. I showed up when I needed to, oftentimes not. Did the test, turned in the homework, got the degree. Really so I could focus on music again, right? So the day job for many years was working in bank branches, financial services. I was a teller, personal banker, financial
Wow.
advisor, 8 years before, during, and after the crisis. That was just to make sure I could pay the bills for this lumpy world of music, right? And the
Right.
aha for me was really like around 2010. Spotify came to the US. I was one of the early users, and for
Sure.
me, again, it just became clear. That was the light bulb. It was like tech is the future of music. Why am I trying to do the
Sure.
old way of business? Work with these antiquated record labels and record deals. And so I wanted to try to bring the world of digital media and tech. I mean, that's kind of the world I knew from music. But I also had a knack for investing. I like financial markets. Taught myself to invest in stocks. I love talking the markets with my clients. And I also had a kid on the way, in early
Okay.
20s. And so I really needed to like elevate my career, my life, and so I could
Sure.
have financial stability, that I didn't have growing up. And I faced homelessness a couple of times. It's something I didn't want for my child, right? And so for 3 years, I was obsessed with how to get into business school and even learn what
Hmm.
business school was to kind of, reset my career. Again, with great fortune, came
Incredible.
across MLT and Twigo, some of these fellowship programs that changed my life, and that's where I was able to meet, someone like Antonio, who right away, yeah, just kind of connected with and been on the journey ever since for well over a decade. So I'll kind of leave it there. That's the obvious
Incredible,
way
incredible.
I
Super
then got
inspiring.
into Wharton, obviously, but yeah.
Yeah, yeah, no, no, incredible, incredible, super inspiring. Antonio?
Yeah, I'll try and be mindful of time and focus on kind of like the Wharton path and beyond. So I grew up on the border of Long Beach and Compton, suburb of Los Angeles. And it's so ironic that I'm sitting here talking about a career in
That's the first
investing.
time I've heard Compton and Long Beach referred to as suburbs. So as somebody that grew up listening
Yeah, that's the audience here.
Snoop and Dre,
Um,
I never knew those as suburbs, but
it's
they are.
suburbs. Exactly. Because everybody claims LA, but LA is just huge. Um, this concept of investing, if I'm being just, really honest, wasn't a word that was appropriate from the area I grew up in. People's day-to-day existence they were more concerned with more pressing rungs of Maslow's hierarchy of needs, right?
Right.
Physiological safety, right? And so we didn't talk about stocks. We didn't even talk about putting your money in the bank where I grew up. I think my master class for investing happened when I watched one of my childhood heroes, Magic Johnson, gracefully retire from basketball and make a really seamless pivot into entrepreneurship. He struck a 50% joint venture with Starbucks and proceeded to create. I don't know if Gina's on the call, but big up Starbucks. He ended up, creating 100 Starbucks in underserved communities across the country in
Right.
neighborhoods like Inglewood. And so that was my first aha of real for us, by us, not just on a hat. FUBU, it's real tangible brick and mortar ownership, owning equity, having a decision, and then also being able to employ people from your neighborhood, literally like bottoms up empowerment. And that was like my spark. I was like, this is it. This is what I want to do. I want to understand what investing is. And I think that put me on a path through undergrad onto business school to pursue that. As Brandon mentioned, we met at the Wharton School. We have similarities, like we had this meandering path. We were both public school, but we're different in a lot of ways. And I think as you start to think about potential partnerships, I think really thinking about each individual's superpower, what they bring to the table, so that you can have a synergistic relationship, and that unit could be, more formidable together as opposed to their individual parts. And we started testing that, really early, just applying to business school through Wharton. Like the path of least resistance was to share hacks on admissions officers and processes and review each other's essays. And we realized we cared a lot about the work product. We were very hardworking, industrious, and we had an ability to communicate honestly and objectively. And I think that was just a good checkpoint. We ended up getting into Wharton, going to school, and we said, why not we keep this party going? Wharton's first
Yeah.
semester is pretty arduous. Let's divide and conquer. And so just having those evolutions of meeting a task, getting into business school, getting in Wharton. We wanted to break into Wall Street. We wanted to break into tech. We continue to refine that relationship, and I felt like that was a really good precursor to launch a venture fund.
Incredible, incredible, incredible. So like that brings me to like you guys. Obviously, there's a personal relationship that you guys were able to build. Both being from California, meeting at MLT, and then matriculating at Wharton. But like, were you, you know, when you were, outside of just the normal, social events and academic pursuits, were you guys talking about like doing something together at that early stage, or because I know you guys ended up coming together a few years after school, but was this something that was always top of mind, or was this something that your post-Wharton careers kind of led to you guys coming together?
Yeah. I think it's, this has been and we're not saying we're successful, but it's been 10 years in the making. There's an investor we like named Naval. He said, play long-term games with long-term people. Me and Brandon had a burning vision of being asset managers. And we realized to get there, we needed a walk back plan, right? And there's several things that you need. First and foremost, you know, you need the training, you need the pedigree, right? So going to Wharton helps, having the finance major, taking those tough classes at the expense of maybe leaning in and enjoying more of the social life at business school. We kind of had a myopic focus and say, we're going to sacrifice, the present, because we realize that that's going to be a necessary check mark that we need. We then went to Wall Street because we knew that was going to be, even though we were going to work really long hours in banking, the benefit is you get like 4 to 5 years of experience in a 2-year span, right? And so that kind of, I think those repetitions were critically important. And so, yeah, I think to answer your question, we were very thoughtful as soon as we hit campus, and we tried to be very mindful of our time. We understood we couldn't do anything, and so we had to be very methodical about the time spent and the skills and the relationships to build while we were there on campus.
Incredible. So for what I understand from your stories, your mutual stories, is that you guys finished Wharton and both doing stints on Wall Street in investment banking, and then you guys came together. So the first time you guys ended up coming together was actually through employment, and so you guys ended up working at Samsung together. Can you talk a little bit about that, how that came about, and how you guys were able to kind of leverage within Samsung? Seemed like you guys were able to kind of be on the same team and kind of make things happen that way.
Yeah, no, that's exactly right. Yeah, I mean, as Antonio had said, I think a lot of this work that we're doing now, I mean, this was the dream, I mean, literally in our business school essays. I mean, we hoped someday, we'd have the luxury, frankly, right, the privilege to do some of the work we're doing now. And so yeah, we both broke into Wall Street. If we had our way, we probably would have wanted to be at the same bank. It didn't shake out that way. And we both went to great firms. He was at B of A Merrill Lynch. He was in M&A, did a lot of tech transactions over there. I went to Morgan Stanley. So I actually wasn't in investment banking, traditional IB. I actually went to equity research, which at the time even was a bit of a probably less, taken path, a less clear one. I didn't really know about it when I hit campus. But I'm, definitely happy with learning about it and going that direction. Covered the internet sector. So Facebook, Amazon, Google, and was able to work on some pretty cool IPOs and coverage groups. And he ended up going over to Samsung Next, which we knew of Samsung, but who knows what Samsung Next is, right? I mean, nobody, right. And you shouldn't. It was basically the software innovation group over in Silicon Valley.
Right.
So a tiny, mighty type of team nestled within this titan, though, this global titan that's headquartered in Korea, right? And so he went over there to do corp dev. So I was in New York at the time. He was over there, and he would come back frequently. We would always be exchanging kind of notes. If anything, I got a firsthand look at a bit of what that experience was even like while he was there. I knew, eventually I'd be leaving Morgan Stanley and looking for my next gig. Wanted to go to a big company and kind of peek under the hood and see how they operate. Maybe a big gaming company, maybe a big digital media company, or just large tech. Samsung wouldn't initially have been on my radar if not for Antonio being over there.
Sure.
And he observed kind of an interesting opportunity. Yeah, I'll let him chime in on it.
Yeah.
And it made it happen.
Yeah, so what one at the time we knew we wanted to start making our way to venture, but this was like pre-bull market run, right? So there wasn't a lot of jobs, right? There wasn't a lot of clear path. Everybody was trying to get buy side roles. This was I saw as our backdoor way into venture. Uh, my
Sure.
mentor, rest in peace, Tyson Clark, who was a partner at GV, he was like, man, you should take that job. You know, Samsung's the sleeping giant, right? Largest constellation of consumer electronics, mobile phones, TVs. If they ever figure out how to be somewhat competent in software and services, I mean, this thing is going to turn the corner. It's going to be a real viable threat. You need to be there and be at the front of the boat, helping make that sea change. And so I got there. I was on the ground, and I knew that the organization would benefit from, I think, Brandon's skill set of being a deep thinker, being a futurist, being able to analyze markets. And I thought that we
Right.
can kind of tag team like we had done for the previous years to kind of get the result that we wanted.
Incredible. Incredible. Awesome. And so you guys got there and started making deals happen. Obviously being backed by Samsung, the check you had access to I don't know, I'm not gonna say unlimited checks or blank checks, but you guys can kind of put some, put some capital out to work. So like what did it look like? What kind of obviously it was tech, but like within the tech sector, what were some of the things that you guys invested in, looked at, etc.?
Yeah. So early stage corporate venture fund. So, mostly pre-seed and seed up to Series B, and had 6 focus areas that were at least tangentially tied to the core lines of business. So a few sectors, things like gaming and media tech, fintech, and digital health, and then underlying tech infrastructure. So really infrastructure itself, blockchain, and like frontier tech, so AI, machine learning, robotics.
Incredible. And were some any names that some of the people in the audience would recognize or not recognize, but maybe because obviously it was early stage, right? So some of these
Yeah.
companies still could kind of become um, big breakout companies in the future. So what were some of the names that you guys are pretty excited about? I mean, you're excited about all of them, but being a few years out, or I guess removed, what were some of the ones that you remember fondly?
Yeah. Yeah. I mean, some of the names, some folks may be familiar. It depends, but so Wonder Dynamics is one that's getting a good amount of press this year. They finally unveiled their product earlier in the year, and they got the Gen AI hype cycle behind them.
Of
So check
course.
that out. But we invested a couple of years ago when they were still in stealth. It wasn't even called Gen AI back then, frankly. And that was during the Web3 blockchain boom, right? And so some of the other names then were like Yuga Labs, which
Oh,
created
oh wow.
Board Ape Yacht Club, but really it's a
Wow.
bigger play, in the world of gaming, blockchain gaming.
Hmm.
Ready Player Me,
Mm,
which we had invested in the Series A, and then Andreessen actually preempted the B and leaned in pretty hard. So they're doing really well. The Sandbox, it's kind of another big blockchain based game taking on
hmm.
Roblox.
Sure.
So those are a handful of some of the investments that we had done there. Folks may or may not be familiar with in this group.
Yeah, those are some amazing names. So as somebody in the blockchain space, Yuga definitely jumps out. But all of them seem like they have a great amount of runway ahead of them. So amazing, amazing. All right, so you guys are there. You guys are, have 6 focus areas. Doing AI before ChatGPT. Like you guys are be ahead of the curve, as you should be. And then you're like, all right, well, starting to get the itch. Like, all right, let's kind of go out and do our own thing. But were there any things that you guys were doing before that, or was it just like from Samsung and on to on fun?
Yeah, as I said, like we typically are very thoughtful and methodical. I mean, partly because we also have liabilities, real liabilities, right? Wife,
Right.
kids, and so it's no longer just us. But oftentimes, and we would say this to founders as well, before you kind of commit, make sure you really understand the value proposition of a particular opportunity. And so for us, before we knew that we could really take on and jump headfirst into, being a fiduciary, um, we started doing angel investments to start. We wanted to see, if we didn't have the Samsung Halo, could we source, win, provide value to founders in a way that they would remember us, even if we had tiny checks. And so I think that was our first, um, insight, was that, we could, really find cool companies that were undervalued and add value, even though we were a basis point, on a cap table. And I think that's what a lot of folks who want to break into venture but feel like, they're not in a position in their career to pivot. It's like, you can always angel invest, and like check size, oftentimes, you know there are things that you can do to add value outside of just writing a big check, and I think it's underappreciated. And so we did that. A good example is, we put together what we call our Fund Zero, a concept fund. We raised from over 100 Black and brown professionals, a lot of folks potentially on this call, and we invested in over 40 portfolio companies. And again, the whole concept was to prove that we can go out and be a fiduciary and execute against our thesis and add value. And I think that gave us the confidence to step out and spread our wings and be able to move faster and write bigger checks and play at a deeper level.
Incredible. Okay, so you did that, and then now, like it seems like you got some comfort from doing that, but investing in some really cool companies. You obviously the ability to kind of raise from 100 people is incredible. So it's a testament to your network, but also the way that you two were able to kind of tell your story and attract people to your vision. So, like, when was it like time? Like, all right, it's go time. Like, thank you, Samsung, appreciate it. Thank you, 100 friends that are co-investing on the side with us. But like now we're going to the big leagues now. What was that decision like, and what was that decision like, and then what was that process? Like what's fundraising like for your own fund? What does that look like?
Yeah. I mean, the process was a gradual one. Admittedly, for years, we had always asked ourselves that question and always check back in, right? Is now the time, or is there more work to be done, right? Is there more knowledge to be gained? Maybe deals to be done, relationships to be formed. And so really, I would say, turn to 22, right? And early that year, we started to realize that was probably the time for us.
Sure.
And so, the first half of the year is coming, and we're continuing to think about it. And around the midpoint of that year, we were certain at that point. And
so
we were able
mid 22, so that
yeah
got the spark in early 22, mid 22 is like, all right, well, we're ready, like we're really gonna make it happen. You're still at Samsung during this whole time,
right.
which is good because you're able to continue to get reps in, continue to work with each other, but also obviously keep paying the bills while you kind of formulate.
Yeah, that's right. So come the midpoint of the year, we were certain at that point we wanted to make the move, and then we did what anybody should do, right? It's not easy, but let leadership know first, right? We had a great relationship with some of the folks there. And especially in this business, frankly, right? It's an apprenticeship type of business.
Right.
It's unique in that regard. And some of the leaders there, we learned a ton from, I mean, folks that were one of the founding GPs of Altos, Brendan Kim. He was the head of the group and a mentor, learned a ton. Right. David Lee had taken over the team, and he's a longtime, venture capitalist, on the Midas list a few times, had, built his career at SV Angel with Ron Conway. So very connected, and has just seen, all these cycles play out. And so we learned, a ton from these guys, and we wanted to make sure we could maintain that relationship, above all else. Right. And so we were open and honest, and they were supportive, again, as any great leader should be, which isn't easy, right? When you've got not even just one, but two people on a small investment team, right? It's going to leave a hole. But we were transparent and then collaborative, and worked on, what a multi-month kind of rollout would look like. I mean, we collectively had 30 portfolio companies between Antonio and I. And so the last thing we wanted to do was just leave everybody high and dry, right? Leadership at Samsung, right. 30 portcos, the platform team that doesn't right. know like what's currently in flight with collaborations with the business units. Like that's all in our heads for the most part, and the relationships and rapport that we had. And so it's been a couple quarters, frankly, smooth transition, making sure everybody was good, all was well. And then really at the end of 22, is when we had left full time officially out on our own and sunset, all in. So been about a year,
almost a year.
Yeah. So
yeah.
And if I could just add one point now, just reflecting on it, is oftentimes the best opportunities are never convenient. And,
right.
We're always looking for this like smooth transition and smooth landing. And it's just it's never the case. You're just going to continue to cycle. And we knew the longer that we stayed, you start to those handcuffs, whether they're silver or gold or whatever metal you prefer, right. They get harder and stronger, and we didn't want to be beholden to that.
Incredible. So yeah, now running your own fund, like what's your thesis? What are you guys focused on? What do you look at? What gets you excited?
Yeah. So Sunset Ventures, we invest at the intersection of frontier technology and consumer internet. These are categories where, we spent a better part of the past 5 to 7 years covering, both at the largest consumer internet company in the world, as well as, on Wall Street. And so it's just, when we think about GP opportunity fit, we're carrying forward areas we've covered and stages we've invested in. So we focus on the early stage, as Brandon said. That can mean anything from pre-seed to seed to post-seed to Series A. We have a real bias for going early. We think that that's where the opportunity is. We think we live in geographies and are investing in categories where there's still a lot of kind of asymmetric upside opportunities. So we talked about stage. The verticals we cover are gaming, fintech, commerce, and work.
Awesome. And any geographies that you're focused on, or you're geography agnostic?
Yeah, I mean, we pretty much are focused on the U.S. only. We I think obviously, AI, there's a lot of buzz in the Valley, but equally, right, when it comes to gaming, there's the gravitational pull to Southern California. But we're going to go where the founders are. Obviously, New York has a really strong ecosystem as well for fintech. So wherever the best builders are, as long as they're domestic, we're pretty agnostic.
That's great. And you guys have been able to put, it hasn't been a full 12 months yet, but you guys have been able to kind of make some investments already. So can you kind of list them out and let us know what excited you about some of those founders and what makes you excited about the prospects of those companies?
Yeah, sure. So yeah, we have been able to make some investments officially in Fund 1. So far, we've got a few that are public. Spill, I think, is probably the one that most folks will be aware of here, and Antonio could talk a bit about that one, which is exciting. A few other names. Faves is a LA based founder, repeat founder. We've known him for years. Really excited. It's addressing social from a different angle. Really meant to be a product that actually brings your close friends and relationships even closer, right? So much more of an intimate kind of interaction and trying to make for meaningful relationships rather than, more of an audience influencer, content-based social media platforms, which most of them have become these days. We were one of the first checks there, basically led the pre-seed. Wow. Another is Craftful. So Craftful is a woman founder based in the Bay. Her name's Yana. We've known her for a couple of years. We actually invested at Samsung as well as through Sunset. So it's great to be able to have that relationship over these last couple of years. She actually did a hard pivot, interestingly enough. And so she was building a UX business really for like Internet of Things, really hardware manufacturers, and trying to help them with the app experiences. About 7-8 months ago, did a real hard pivot into this world of Gen AI. Was dabbling with it, when ChatGPT started to come out, and they did a hard pivot, and they're actually seeing some success with it. So we
how is that?
applaud.
How is it as a VC to support a founder through that, right? Because I mean, sometimes it's from a perspective of like, hey, like I invested in this idea, and now you come in and tell me this thing that's completely different. But on the other hand, I'm sure sometimes it's about like you invested in the founder, so like whatever, you kind of trust their discretion. But yeah, what was that like?
Yeah, no, that's a great question. I mean, it's the latter, to be honest, especially at the stage that we invest. It's the founder. I mean, above all else, very overweighted. And again, I mean, that's what we're underwriting. I mean, what this founder's going to be willing to do, potentially capable of. And if they've lost, right, I mean, they're closer to it than anyone. If they've lost conviction on the idea, their initial idea, then, who would we be to try to force them to even stay on that path? Wouldn't make any sense for anyone, right? And
Right.
I mean, usually it's the opposite, to be honest, right? I mean, for them to let go of that idea, I actually think is big of them. It's very difficult, right? The sunk cost
Sure.
is intense, and so it's the great founders that are willing to do so. I mean, many outliers out there. So the happy endings in the world of venture started with a hard pivot somewhere in the journey, early on when they're trying to figure out product market fit. It's those that are too, just wed to the idea for the idea's sake, right? And willing to just see it into the ground. That's not really what's best for anyone, frankly. And not the founder, not the users. The investors, shouldn't worry as much about that, right? I mean, at the end of the day, you make these bets, you have a portfolio of bets, I mean, some things aren't going to work out. As long as they have that conviction and they push it, as hard as they can, right? To go kind of big or go home. And so, yeah, we were supportive all the way and frankly excited when we saw her excited about this new path, and it started to take off quick. Right. And so think of what that does for the morale over there, right? When they're muddling along, and now a hard pivot and they actually get some momentum,
Sure.
So, yeah,
that's awesome. So I think I asked you that question while you were just going through the list. Was that the last company that you invested in, or was there any other that you wanted to highlight?
Another is the Grand, who we should also mention. Tone, I'll let you talk about the Grand as well, Spill.
Yeah, the Grand is awesome. It's our first Wharton bet. Anita Hussein Chowdhury was in my learning team.
Wow.
She launched a scalable coaching platform, which I think was initially targeted at startups, but now is starting to reach enterprise scale and targeting sports teams and corporate companies. We're super excited about that team because they built community at First Round, one of the preeminent seed funds in the country. And we felt like who better, right? They cut their teeth at just an amazing platform. Who better to serve founders? And so their offering not only is supporting externally, but one day we hope to use for our own portfolios and hopefully for our executive team.
Incredible. Awesome. So I'm gonna ask you one more question. and then we want to kind of get into Q&A with some of the guests here. Um, just to pivot a little bit, just kind of talk more macro. Obviously we're Black. You guys are in venture capital. Like there was just this article around the fact that Black founders only got 0.13%. So there's 13 basis points of venture capital in Q3 of 2023. So not even a percent. What yeah, I mean, you guys have any opinion there? Like what do you think is going on? Obviously we all remember 2020 and kind of like all those promises after, the unfortunate passing of George Floyd and kind of everything that went behind that. But obviously we're now in a completely new political and social environment. I don't know if that is kind of what adds to it, but yeah, I want to ask you two to kind of provide your opinions around that.
Yeah, I mean, there's a lot to be said about the fluidity of the macro environments and the various drivers, right? Whether it's inflation driving kind of the tightening of rates, we have obviously a lot of geopolitical tensions going on in various regions of the world. Moving all that to the side, it's a very simple, equation. There is not enough diverse capital allocators. And because of that, it makes it really hard to invest in diverse founders. People invest in people that they have some sort of familiarity,
Right.
whether that is a lived experience or whether you're a sector expert focusing on a particular category. And if you have a diverse set of consumers that have both lived experiences and care about categories that may be atypical from an investor sitting in Sand Hill Road, it's going to lead to more passes than yeses. It's that simple. And so, going back to the macro, right? Broadly, there has been a pullback in LP allocation. They've been over their skis in terms of allocation to private markets, especially given the denominator effect where public markets go down, but given the illiquidity of private assets, like you're technically over your skis. And so you're not going to take a bet and invest in new fund managers, right? You're not going to increase your allocation to venture. And without that dry powder trickling down to diverse fund managers and new fund managers, there's going to be somewhat of cardiac arrest, which we've seen happen with diverse founders.
Yeah. No, very, very poignant. And I agree with that wholeheartedly. So how can the Black Wharton MBA community help you?
I mean, I think just piggybacking on that last conversation, right? We are a diverse-led fund, right? Our first check was into Spill, right? These are just rock star diverse founders. We know them, we can spot them, we support them, and it's not just post-check, right? We help them throughout their journey. A lot of folks that are graduates of our schools hopefully have very promising careers and are smart with their asset allocation. We would ask that you consider allocating a small percent, right, into the venture asset class. And it doesn't necessarily have to be solely with us, but support investors like us, right? Because that could lead to potentially new deal flow as well. So either direct investing in venture funds, refer us to high net worth accredited investors and qualified purchasers. Again, I'm not soliciting our fund. Let me be clear. But
I don't know if that's like legalese. I can say it for you. These guys are fundraising. Sunset Investors is fundraising. We have to support our own. Yeah, these two investors are people you want to kind of get behind. But I'll let you finish.
So a real anecdote or thought exercise, Fritz, and you and I have talked about this before, is every year there's some kid on Locust Walk, and she is a builder, a technocrat, and she has a great idea. But because she may have come from a family that does not have a lot of liquidity, and she can't take a gap year, she can't, she has to accept that Goldman Sachs offer, that Apple offer, because it's life-changing for the trajectory of her lineage. Another opportunity is for her to pursue that opportunity and be backed by a fund, right? Non-recourse investment. And the hope is that that founder, can have a J curve outcome and build a, multi-billion-dollar company such that they can hire a diverse leadership team who also gets to ride that escalator up and have, life-changing wealth, right? This is the new crop of angel investors who are back. So there's just orders of magnitude outcomes by having one of these unicorns, but it starts really planting good seeds at the earliest, allocator level.
For sure, for sure. Incredible. Listen, you two are very busy individuals. Really, really appreciate your time. Really inspired by your story. I think you're going to go and inspire. You've inspired everybody that's been a guest here. But we're going to, we're recording this. We're going to put it on, your Spotify's, your Apple, your YouTubes, and so you're going to kind of continue to inspire in perpetuity. What we're going to do for the guests, we're going to have a Q&A, but we want to have it off the record so we could be as transparent and open as could be. So with that, I appreciate our guests, and